A warm welcome to you, my dear students. Another chapter in Unit 11, Trial Balance. In this chapter, there are no flashbacks, no reminders. We are going to prepare the trial balance. Don't worry, we are not going to rush. Preparing of the trial balance. That is what we are going to take in this chapter. Okay? Right, children. Look at the topic given. Posting transactions from prime entry books to the ledger. We have done this. Posting transactions from prime entry books to the ledger. We have done this like several times. Yeah, several times. When we were doing prime books and ledger accounts, especially the cash book and petty cash book and purchases journal, sales journal. When we were doing those lessons, you must remember from prime entry books, the transactions in the prime books, right? The transactions in the prime books were transferred at the end of the month to the ledger. At the end of the month means at the end of a period, and I told you a period can be 1 week or 1 month. It depends on business to business. Okay, at the end of a period, a specific time period, right, we sum up, total the prime books and transfer those prime books totals and the transactions in the prime books to the ledger, to the relevant ledger accounts. That's what is given here. Transactions that take place in an accounting period. See, just like I said, period. In an accounting period, yeah, are recorded in the prime entry books and thereafter recorded in the ledger accounts. Okay, let us study how to record transactions in prime entry books, how to post transactions to the ledger, yeah, and how to prepare a trial balance. This is the most important part. How to prepare a trial balance from the ledger balances. Okay, we have a question, children. We have a question here, right here. Example question. The following are transactions that had occurred in the month of January. Salmonella's business. Right. Must be a very beautiful business. Yeah. Salmonella's business. Okay. There you go. Salmonella's business. Let's check the transactions. All right. Cash receipts and cash payments. We have cash receipts and cash payments. A list of cash receipts and cash payments right here, with the dates. 1st of January, started the business. Capital invested, 200,000. Purchased goods on cash. Cash purchases. Opened a bank current account. A bank account is opened. Obtained a bank loan. A liability loan is taken. Obtain a bank loan, cash sales, payments of shop rent, blah, 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 blah. A lot of transactions. All these transactions are cash transactions. Just like it is given here, cash. All right? All these are cash transactions. Cash transactions, which means they should be recorded in the cash book. Simple facts. Which means they should be recorded in the cash book and bank book. Cash book and bank book. See, bank account. Yeah, all right. Having that in mind, we'll move on. Transactions relevant to the bank current account. All right, all the bank transactions are here. See, checks received and checks issued, cash deposited and cash withdrawn, bank related transactions. So just like I said, we need a bank account. Credit purchases, transactions related to credit purchases. Wow, what do we need here? What do we need here? Transactions related to credit purchases. What do we need here? What book we need? Credit purchase of trading goods. Ah, all right. I thought you must have forgotten. Credit purchase of trading goods. We need the purchases journal. Purchases journal. Okay, we need the purchases journal. There you go. We need the purchases journal. All right. Oh, wait. I put the curly bracket a little too long, right? I have to undo that. Okay, now, why? These are the transactions related to purchasing of trading goods. Only these. Only these, children. Only these. Okay. These are the transactions of purchasing. So these go to purchases journal. Purchases journal. These are transactions of credit sales of trading goods. So, which book? Cash book? Sales book. You're right. Who said cash? Sales daybook or sales journal. Sales journal. So, credit purchases goes to purchases journal. Credit sale of trading goods go to sales journal. Right, do we have more information? Oh yeah. Oh no, we don't have more. We have the required part. What is required? We need a cash book with discount columns. We need to prepare a cash book. Need to prepare a bank account with discount columns. We need to prepare a purchases journal, sales journal, and relevant ledger accounts. So from these, from these prime books, cash book, bank book, purchases journal, and sales journal. From these prime books, we need to get the information to the relevant ledger accounts. To the relevant ledger accounts. Okay. Then balance the ledger account and prepare the trial balance. That's the procedure. Okay. That's the procedure. Balance the ledger accounts. Balance the ledgers and prepare the trial balance. That's what we have to do. Let's get on with it. Let's go. First, we read the question. It is the transactions occurred in the month of January in Samanala business. That is why there's a Samanala picture here. All right, Samanala's business. Yeah, Samanala's business. For the month of January, all the transactions are given likewise. Okay. First of all, children, we need to look at one thing. Is this business a newly commenced business or a continued business? A business which has been continuing for a long period of time. A business which has been done for some time. Or is it a business which was commenced or started newly? What type of a business is it? It's a commencement. See, started the business newly by investing 200,000, which means, children, if this Samanala's business is a commencement or a newly started business, there are no opening balances. We have learned how to record opening balances, but in this question, no opening balances, because this business has been started today. So from today only, we are recording transactions. Okay. Right. Cash transactions first. Credit transactions next. Credit transactions. No, bank transactions next. Then we have credit transactions. See, purchase journal, and these go to sales journal. Credit purchases and credit sales. That's it. We have to prepare the cash book with discount columns, bank account with discount columns. First, let's draw the cash book and bank book. Here you go, cash book and bank account. Notice how the cash book is drawn. I'm not gonna stress on this again and again. I'm not gonna explain these things again and again. Okay, the cash book is drawn with discount columns. Okay, discount columns, date column, description column, discount column, and cash column. This is the center line. Then again, date column, description column, discount, and cash. Okay, debit side and credit side. We have the bank book right here, date column, description column, discount column, amount. This is the center line. Again, date column, description column, discount, and amount. That means amount means cash. There you go. That is your cash book and bank book. Let's record the transactions. Here we go. Started the business by investing 200,000. Investing 200,000. Owner brings in money. That is capital. Okay. You are not the owner. If you consider you as the owner, you are not going to do accounting. You are going to mess up all the accounts. You consider yourself as the accountant of the business, not the owner. Okay. So as the accountant, you get cash, money coming from the owner to the business. Cash in, debit to the cash book, double entry, credit to capital account. That's right. Started the business, investing 200,000. Debit to the cash book. Here you go. As capital. Description, capital. 200,000. Credit to the capital account. Where is the capital account? Here, capital account. Credit 200,000. Say in cash. No problem. Next transaction. This is done. Purchase goods on cash basis. Purchasing goods. We are spending money. Money goes out. Cash book, credit. Goods account, debit. Is it goods account? Cash goes out. Cash going out because we are purchasing goods, right? Bringing in goods to the business. Goods come in. Cash goes out, so cash credit. Goods come in. Goods debit. Goods account. No. Purchases account. Purchases account. Debit. Cash credit. Let's see. Ticket. Let's go to the cash book credit side. 85,000 should be there. Yes, cash book credit side, 85,000 is there. Purchases. And the purchases account should be here somewhere. It's here. No problem. Debit to the purchases account. Debit purchases. Credit cash. Debit purchases. Credit cash. 85,000. Yeah, it's done. Yeah, it's double entry is debited and credited. But why am I pointing here? Don't get confused. This is the purchases journal, not the purchases account. This is the purchases account. This is the ledger account, children. This is the ledger account. See? This is the ledger account. In this only, you debit 85,000. This is the purchases journal, and journal is used to record credit purchases only. But this is a cash purchase. So cash book credit, purchases account debit. Not this account, the ledger account. Okay. Right, let's go to the next one. Open a bank current account depositing 20,000. Open the bank current account depositing 20,000. 20,000 goes out. Yeah, 20,000 goes out from cash. Cash goes out. 20,000. So cash credit. Cash credit. Yeah. Cash credit. Cash credit. Yeah. Open a bank account with that 20,000. You didn't just spend the cash. You opened a current account. So money goes to the bank. A new bank account is opened for your business. Cash credit because cash goes out. Debit to bank. Bank account debit because it's a new account, which is the bank account. It's a new account, which is the bank account. And bank account is debited 20,000 as cash. Description cash. Bank account debited. Cash account credited. Description bank. Okay. Very simple. This name goes to this account. That account name comes to here, this account. Cash is the description of bank account. Yeah, this account. Cash is your description. And in the cash account, bank is your description. Bank. Okay. Writing descriptions for the accounts are easy because you just take and exchange the names for the description column. Okay. Next transaction. We are done with that. Open the bank account. It's done. Next transaction. Obtain a bank loan, 50,000. Money comes into the business. We are taking money, lending from lenders. Lenders means people who lend us money. From a lending institute, finance company. No. It's a bank loan. So from a bank, we take money. We borrow money. So money comes in. Cash book, debit. Cash book, debit. Credit to loan account because loans are liabilities. 50,000. Cash book should be debit. Here you go. 50,000. Cash book should be debit and credited to bank loan account. 50,000. There you go. 50,000. What else we have? We have cash sales. Tell me the double entry. Cash sales. Cash sales. Tell me. You tell me. You. Yeah. Tell me the double entry for this. Cash sales. 150,000. Cash goes out? No. Cash comes in because we are selling goods to customers. Here you go, man. That is 150,000 for the goods. So money comes in. Cash book. You should put this 150,000. Debit. Cash book debit. 150. Credit to sales account. Cash sales 150. Debit to cash book 150. Credit to sales account. Where is the sales account? Is this sales account? No, this is the sales journal. Sales journal. Where is the sales account? 150,000. Where is the sales? Where has it gone? No. No, this is the sales account here. Okay, credit to sales 150,000. It's there. This transaction, yeah, it's done. We are checking the next transaction now. That is this one. Payment of shop rent. Paying. Cash going out. Cash going out. Paying. So cash credit. Cash credit. Expense is the rent. Shop rent. Cash credit 2,000. Debit to expense account. That is rent account. 2,000. Where is the cash book? Credit side 2,000. It's there. Where is the rent account? Should be debited. It should be here. Yes, it is here. 2,000 debited. Likewise, children, we record the double entries of cash transactions. Cash transactions. Okay. All right. Received 11,600 from Priyani, a debtor. Discount allowed 400. Now there's a discount. We should do that. Received 11,600. From Priyani. So money coming into the business. Cash book, debit, 11,600. Credit to which account? Priyani's account. Priyani's account, credit. Cash book, debit. But there is a discount allowed 400. That must be recorded because it's a cash discount. Cash discount must be recorded. In this cash book, debit, Priyani is here. 11,600 is here. 400 is here. Discount column. The discount column. Yeah. Yeah. That's the way you record cash discounts. So, what is done? What is done? Priyani, 11,600 we received from her. So, cash coming in, cash debit with the discount. Priyani's account should be credit. Priyani's. Where is Priyani? Imesha here, Turangi here. Where is Priyani? Priyani is here. Yeah, Priyani is hiding. Yeah, so Priyani's account should be credit. 11,600 cash and the discount 400 too must be recorded. Credited to Priyani. Cash 11,600, discount 400. Yup, that is done. Done. Next we have repayment of bank loan installment, 3,000. Repayment means cash going out, cash has to be paid for, settle the bank loan. Cash credit. Where's the cash book? There's the cash book. Bank loan, 3,000. Okay. And bank loan account should be debit. Here you go, bank loan account. Debited. That's right. Yeah. Closing to the very end of cash transactions now. Yeah, this is done. Received a check worth of 9,000 from Imasha. Imasha. We received, let's use the same color for debtors. We received a check of 9,000. From whom? Imasha, a debtor. No discount given? Well, no discount given. Taken money. We have taken money from Imasha. Cash comes in, cash book debit. Here you go, Imasha. 9,000. And Imasha's account should be credit. Where's Imasha? Priyani is here. Imasha is there. Right. Imasha is there. Credit 9,000. Credit 9,000. Imasha. Credit. Because debtors decrease. Debtors decrease. They are credited. When they pay money to us, we don't have they don't have to pay us anymore. So our debtors pay us, and when they leave, our debtors go down. So payment received from Imasha decreases the data. That's why it is credited. Debited to cash book because we received money coming in. That is done. Okay. Another transaction of a payment. Paid 7,600 to Surangi, creditor. Okay, we'll use another color for creditors. Paid 7,600 to Surangi and discount received. We have received a discount. We are paying this creditor, Surangi. Okay, we are paying this creditor. We are paying money. So money goes out. Cash credited. Cash books will be credited because money going out. Credited and debited to Surangi. But there is a discount of 400. What do? We go to the cash book. Should credit the cash book. 7,600. Discount column 400. Description is Surangi. Yeah. And we should find Surangi's account. We should draw the Surangi's account. Where? Here. Surangi is right here. Debit her account. Debit it with the 7,600 and the discount value 400. Okay, Surangi's account, debit with the discount. Why debit? Because Surangi is a creditor. When we pay to her, the creditor value goes down. We don't have the Surangi as a creditor anymore. We don't have Surangi and we don't have to pay her because we paid off to Surangi. So creditors go down. That is why it is debited. That's it. Credited to cash book, Surangi. We are done with that. What else do we have to do? We have to record this. Received 5% discount when paying money to Vijitha, another creditor, just like Surangi, another creditor, that is Vijitha. Received 5% discount when paid money to settle 12,000. We have to do a calculation here. A calculation, children. We have to pay 12,000 to Vijitha. For this 12,000, we received a discount of 5%. 5% from 12,000. Answer is how much? 600. You want me to do the calculation? 0, cut the zeros. 5 into 0, 5 into 2, 10, 5 into 1. 5 with the remainder, 600. So 600 is the discount amount. This discount should be deducted from the price or the value we have to pay. What is the value we have to pay? 12,000. 12,000 is the amount that we have to pay. But now we are not paying 12,000 because we have received a discount. So 12,000, from 12,000 you minus this 600 and the answer is how much? Answer is 11,400. Only 11,400 should be paid now. Okay. We calculated the discount. From 12,000. All right. Let's see. We are paying, so cash book should be credited. We are paying, so cash book should be credited. There you go. Vijitha Vijitha 11,400 and the discount is 600. Just like we did the calculation right here. Okay. And this should be debited to Vijitha's account, the creditor. Where is Vijitha? Where is Vijitha? Vijitha. Not here. Vijitha is here. Vijitha is here, right? Debited to Vijitha 11,400 cash, 600 discount. Both should be recorded, remember. That's it. We are done with the cash transactions. All the cash transactions recorded. Okay. So what we are going to do, we are going to tick it, saying that it's done. Moving on, what do we have next? We have transactions relevant to the bank current account. Now the bank account transactions, okay? First one, relevant to the bank account. Purchase goods for sale by issuing a check of 15,000. Purchased goods, it's a purchase. But how did we pay? From a check. By issuing a check. So, money is paid not from the cash but from a check. Bank money goes down, which means bank account must be debit or credit. Debit or credit? Credit. Bank account must be credit. This is our bank account. It is credited 15,000 as purchases. And purchases account should be debit. There you go, bank and 50,000. What else? What else? Okay. This is done. Received a check amounting to 6,200 from Priyani. Remember, there is a data called Priyani. She has paid, she has sent us a check. She has sent us a check. Okay. Check of 6,200. A discount was deducted 300. This check was deposited in the bank current account immediately. I have told you children, when we receive checks, we don't run to the bank and deposit the check. Normally, when we receive a check, we get the check, check the check, yeah, and put the check into the cash drawer, the drawer. Keep the check in the cash drawer. So, the check is with cash at hand. Check is with cash at hand, not in the bank. In that case, we should enter the check in the cash book, but not here. No, because here it says the check was immediately deposited in the bank. Immediately deposited in the bank. That is an important thing to remember. This check was deposited in the bank immediately. Yeah. Then we should put the check amount to the bank account. 6,200, the check amount from Priyani. From Priyani. From Priyani, 6,200 but there was a discount deducted 300. So receiving means, you know that receiving means we are getting money, from Priyan. Okay. Cash book should be debited. No, not money. We got a check, and the check was directly sent to the bank. Then the bank book should be debited. It's here, 6,200 and discount 300. Description: Priyani. Description: Priyani. Okay, and we must find whose account? This girl's account. Must be a pretty girl, huh? We don't know. Priyani. There she is, hiding under the accounts. Yeah. And it is credited 6,200 as bank and 300 as discount. Yeah. Discount. Okie dokie. That's it. Priyani's account credited 6,200 and 300. That is the discount. Here, 6,200 and 300. Because we got money. Not money, a check. Debited to bank account. Next, deposited in the bank account immediately. That is why we put that amount to the bank. Next one, issued a check amounting to 2,000 for shop rent. That is easy. Issuing checks means issuing money going out from the bank. 2,000 credited to bank account and debited to shop rent account. Here, as description as bank. Okay, is that it? No, we have one more. Deposited the check received from Imasha on 20th. This is the date? No. Then where is this amount? Where is this transaction? Deposited the check received from Imasha on 20th. 20th first. Is this 20th? No. 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 This is the transaction we are doing. We have received a check from Imasha on 20th. Where is this check? Where is it? Children, it is a check which was put to your cash drawer, which means it should be here. There you go. 20th, received a check from 9,000 from Imasha. This check was not sent to the bank immediately. We didn't run to the bank with the check. We kept the check in the cash drawer. So this check is recorded in the cash book. Here you go. 20th, this check. Now it should be put to the bank account because we deposited that check. We have to put it to the bank account, debit side. Here you go. This is the 9,000. Debited to bank account. Saying cash, Imasha, and credited to cash, saying bank, Imasha. Because you put the check to the bank, you have to write bank for the description, and because the check is Imasha's check, you have to write Imasha also. In the bank account also, debit, because the check was sent to the bank. Money comes to the bank account. So debit to the bank, 9,000 as cash, Masha. Okay. Right. These transactions should be done very carefully, because when you receive a check, most of the time you just put the check directly to the bank. You debit the bank. But it's wrong if the check is not immediately deposited. You can't put to the bank. You have to put it to the cash book. Okay. Then it's done. Yep. All right. We are going to the next part. Credit transactions. Now cash transactions over. Credit transactions starting. Credit purchases goes to the purchases journal. We already marked it. Purchases journal. See? We already know that these transactions go to the purchase journal. We have done purchase journal several times. So write Surangi in the description or the supplier's name as the supplier's name. Write the invoice number 45 and put 24,000 to the purchases journal. Surangi, invoice number 45, 24,000. Purchases journal. Another one for purchases journal here. This is done. From Vijitha, we purchased 20,000 worth of goods. Directly goes to purchases journal. Description Vijitha, 20,000. And the invoice number. Okay, done. Your purchases, credit purchases are over. Credit purchases are over. Only these two. Then we can total the purchases journal. Go to the purchases journal. Here we go. Go to the purchases journal. Purchases journal. Draw your, to sum up the purchases journal, draw the sum box. Sum up and get the total. 20 plus 24, it's 44,000. Get the total of purchases for the month. Transfer this to the purchases account. Where is the purchases account? Where? It's not here. It's here. In the purchases account, debit side, saying creditors, it's here. 44,000 is entered. Yeah. So debit the total purchases of the month to purchases account likewise. That is only one entry you put to the debit side from the purchases journal. Then each individual entry, that means 24 to Surangi, 20 to Vijitha, individual creditors accounts, you should record the individual amounts. Because you debited the purchases account 44,000, you credit to individual accounts Surangi 24,000, Vijitha 20,000 as purchases. Purchase journal done. You recorded in the purchase journal and you transfer the month end total to ledgers. This is completely done. Okay. Now the sales journal. Credit sales, go to sales journal. Credit sales of trading goods. Go to sales journal. We have first one, 19,000 to Priyani, invoice number 1. Let's go to sales journal. 19,000 to Priyani, invoice number 1. Sales journal. Okay. Next one. This is done. 25,000 to Imasha, invoice number 2. 25,000 to Imasha, invoice number 2. Finished. No more entries in the sales journal. So we are gonna sum up the sales journal. Total it. Take the total by adding all the entries. Only 2. 25,000 plus 19,000, it's 44,000. This 44,000 should be transferred to the ledger. To which ledger account? Sales account. From the sales journal to the sales account. Okay, sales account credit. Where is the sales account? Where? Oh, it's here. Sales account credit 44,000. Description is debtors. And the debtors account should be debited with individual amounts of the sales journal. 19,000 to Priyani, 25,000 to Imasha. Let's go and find these beautiful people. Priyani, she's here. 19,000. Imasha, she's here. 25,000. Debited to debtors. Finished. Done. All right. Children, I think we are done with all the transactions, yeah? Yeah. We are done. We recorded all the cash transactions in the cash book. We recorded all the bank transactions in the bank book. Bank transactions. All these are bank book. Yeah. Then we got the credit transactions to the purchase journal, finished, and sales journal, finished. That's it. Finished. Bank account also finished. Purchase journal also done. And sales journal also done. Ledger accounts, relevant ledger accounts. Right. Let's check the relevant ledger accounts now. From the cash book, did we record all the double entries when we entered in the debit side capital? 200,000. Did we enter to the capital account? Yes. When we recorded bank loan in the debit side, 50,000. Did we enter that 50 to the bank loan account? Yes. We already recorded. As and when we entered one entry, we entered the double entry of it in the relevant ledger. That's how you do it. We enter in the relevant ledger the double entry. You cannot, well, you can, of course. If you do, you're going to go wrong. What am I talking about? If you do one entry at a time, and wait until the cash book is finished to take each entry and put to the relevant ledgers. After all, every entry is recorded in the cash book. After all the entries are recorded in the cash book. After that only, if you try to take the double entries to the relevant ledger, that's going to take so much time and it's going to be confusing. No, don't do it. As and when you enter one entry, you go and enter that entry to the relevant ledger account. Okay. You know, these are the proper ways and the easy and quick ways to do this type of a question. Okay. So we are done with the relevant ledger accounts too. Here also we did the transferring to the ledgers from purchase journal and sales journal. We transferred to the ledgers. Okie dokie. Balance the ledger accounts now. Remember, cash book is a ledger account too. So this is a prime book as well as a ledger account. Yeah. So balance them. Let's balance them. Well, they are balanced. They are already balanced. They are already balanced. See? Debit total 420,600. That is in the credit side 2. And the balance, the shortage of the credit side is 282,600. 282,600. That is the balance of the cash book. Do not balance the discount columns. You don't. It's a mistake. You don't balance the discount columns, okay? You just take the total and let it be. Take the total and let it be. This is the total and this is the total. Put the total and let it be. Yeah, and we can go ahead and we can balance the other accounts. All the accounts are balanced. Then what about these? Tell me. What about these? You just take the total and let it be in the discount columns. Now, most of the children forget this when they do such a question. Take the total and don't let them be. Don't just leave them. Transfer to the relevant ledger accounts. What is the relevant ledger account? This is the discount allowed column. Discount allowed. This is discounts received. This goes to discount allowed account. This goes to discount received account. Let's go and see. Discount allowed. Where is the discount? Here you go. Discount allowed account. Debit 400 and 300. 700. Where did this 300 come from? We have only 400 in the cash book. Why did you forget the bank book? Bank book also has discounts allowed. That is 300. Yeah. And discount received 1000, nothing in the bank book, which means in the discount received account only 1000 should be there. Here, discount received account only 1000 is there. Okay. Yeah. That's it, children. Just balance all the accounts and take the balance brought forward to the take the balance brought forward to the where, and take the balance brought forward and worship it. No, take the balance brought forward of each and every account to the trial balance. Let's do it. Cash book, balance brought forward. Where is it? Too much scribblings. So I'm going to remove all this messed up all the lines. The mess is cleared. Now I can find the balance brought forward. Where is the balance brought forward? Where is it? Balance carried down is here. Balance brought forward, the same, is in the debit side. Same as in the cash book, in the bank book also, balance brought forward is in the debit side. Let's check. Cash book, balance 282,600. Bank book 18,200. Let's go to the trial balance. Voila. Cash, bank, both in the debit side, 282,600, 18,200, debit side. Next, what do we have? We are done with the cash book. We are done. So, a big tick and a big tick to both, because we took the balances to the trial balance. Next, we have purchase journal, sales journal. Do we take this? No, journal balances. Journals are not even balanced. Journals are not even balanced. Journals are summed up, and the total has already been transferred to the ledger. So this is done. This is done. There is an account here. In that account, balance is in the credit side. That is the capital account. Let's check whether we have the capital account in the trial balance. Trial balance is here. Capital. Yup, it's in the credit side. 200,000. See, capital account, credit side, 200,000. This one. Okay, it's done. So we can tick it and go ahead. Purchases account, it's balanced, and the balance is 144,000 in the debit side. Bank loan account, 47,000 in the credit side. First, let's check whether purchases account is there. 144. Trial balance. Yeah, you're there. You're there. And do you have the purchases account balance? Yes, it's here. 144,000. Do you have the bank loan account balance in the credit side? 47,000. Yes, it is there. Bank loan, 47,000. There is no particular order. All right, children. no order is needed. You just can mention any account, but do not forget to mention the balance in the correct side, debit and credit. Otherwise, you're gonna go wrong. We are done with the bank loan also. So a big tick to purchases and a big tick to bank loan. Both accounts are balanced and the balance is taken to the trial balance. So bye bye. Oh, we have one more. We have one more. Priyani's account. Right. In Priyani's account, where is the balance? Which side? Debit side, because she's a debtor. Balance brought forward 500. Let's go and see whether trial balance. Do you have Priyani's account? Yeah, Priyani's account is here. Debit side 500. That is also done. Big tick. Next, Imasha debtor 16,000. Surangi creditor, credit side 16,000. Imasha debtor, debit side 16,000. Surangi credit side 16,000. Trial balance. Where is Imasha? Imasha is here. Debit side 16,000. Surangi credit side 16,000. Both are recorded correctly. Yes, it's done. Then finally we have, these both accounts done. Finally we have Vijitha creditor, credit side 18, credit side 8,000, credit side 8,000. Let's check whether this 8,000 is in the trial balance. Vijitha creditor, 8,000 in the credit side. Okie dokie. We are almost done. We have discount allowed account. Discount allowed account. Balance brought forward is in the debit side. 700. Discount received account. Balance brought forward is in the credit side. 1,000. Okay, let's check. Discount allowed account, debit side. Discount received account, credit side. Both are there. Yes, that's it. We are done with all the, oh no, we have two more. Let's check the sales account, credit side and rent account, debit side. Of course, they are correct because sales account is a income account, sales account credit side, rent account is a expense account, that balance is in the debit side. Children, when the trial balance is done and finished, when the trial balance is finished, all the ledger account balances are recorded in the trial balance. When all the ledger account balances are recorded in the trial balance, you sum up, take the sum of the debit column. The sum of the debit column must be equal to the sum of the credit column, which is exactly has happened, and this trial balance is done. Done deal. It has balanced. Okay, nothing wrong. But remember, even though the trial balance balanced, it doesn't mean all your accounting records, all your books and ledgers, everything is 100% correct. It doesn't mean. No, unfortunately, it does not mean that even though the trial balance gets balanced nicely, it doesn't mean that all your books of accounts and accounting records are 100% correct. You can't be sure of that. No. But you can be sure of one thing, that is the mathematical accuracy is guaranteed, which means every amount, every transaction is debited and credited correctly, and ledger accounts are balanced correctly. Okay, right, children, I'll meet you in the next session, in the next chapter, with the next activity, which should be done by you and me. Okay, this should be done by you and me alone. It's not an example, but this example that we did, summonless business, has come to an end, and so is this chapter, so is this session. We have come to an end. So I hope to see you soon, children, with the next activity. We are going to do the prime books. We are going to prepare the prime books and the ledger accounts, balance the ledgers, and prepare the trial balance. Be good, do your work, and have a great time. Thank you.